In this video, traders, let's talk about biggest risk myths. Stick around. Hey guys, warm welcome to you. All right, so two traders. First one says I risk $100 per trade. Second trader says I risk $2,000 per trade. Who risks more? Well, the obvious answer is the guy who risks $2,000 per trade, right? He's risking 2,020 times as much as the first trader. Not always the case. Not always the case. Now, on a per trade basis, that is fact. But imagine this. If this trader, let's call this guy trader A and this trader B, if trader A, not E, if trader A trades 50 times a day, how much is he risking? I know this is an extreme example, but let's say a week. That's not unusual for a day trader, right? 10 times a day, 5 days a week, 50 times a day, how much is he risking? He's risking a total of $5,000 risk. Now, okay, he might not lose every trade, but that's reasonable risk. This trader, trader B, trades once a week. You know, he picks his time, picks his target, and I'm using a little bit extreme examples here, but you'll get the point in a moment. He trades once. What's his risk? 2,000. Okay, now, there's an argument here to say, well, all right, well, trader A is not going to lose 50 trades in a row. Okay, well, we'll come back to that in a moment. And trader B is, you know, if he's wrong, he's lost his whole 2K, right? But just look at this. This is the fallacy that we sometimes have with risk. And I'm using extreme examples, but to prove the point, this seems ridiculously different. Ridiculously different. Well, $100, $2,000, miles apart. But when you look, they're not dissimilar. Or they actually could almost be crossing. This guy's trading $100 per trade, but he's trading so much, so frequently, and that's not even that much. He's got $5,000 risk, total risk. Admittedly, that is if you lose all his trades. But even if he, lost, way less in one sum, he could still be risking $2,500, let's say. If he's winning some and losing some, but on a real world basis, he's okay, but he's still, still risk, right? And yet that's still more than this guy who's trading once and it's $2,000. But yet many of us, many of you guys as well, go, well, I'm just going to do $100 risk per trade, but I'm going to trade loads and loads and loads, and you go overtrade, overtrade, overtrade. Overtrading is risk. And you can see that here. Because yes, it's extreme examples, and maybe better off going $500 per trade and does 4 trades a week. That might be more similar. But even then you can see that it's 5 times as much risk per trade, but the fact that the trader B is not trading as much, and he's not overtrading, he's not trading every single thing that he does, everything that he sees, should I say, he's actually risking less. And this is the key. Let's just cycle back to what I said here, where we said, okay, well, he's not going to lose every single trade. Do you know what trader A has? The hidden risk that trader A has that trader B doesn't, is that trader A has much more of a propensity to go on tilt because of the frequency of trades. Now, this is not a day trading versus swing trading battle or scalping versus day trading. This applies regardless, because this could be a scalper trading 50 times in a day, and this could be a day trader trading once in a day. So it doesn't necessarily mean day trader versus swing trader. It's frequency and looking for the opportunity. But let me go back to what I said. The trader A, who's trading very, very many times, has a much higher propensity to go on tilt. He has much more emotional risk, chimp risk. He's got that risk. This second trader, trader B, doesn't have as much of that because he's got time to think. He's got time to consider. He's got time to wait for his next trade. He's got time to wait for his opportunity, whether he's trading on a daily basis or a swing trading basis. He's nowhere near as frequent. Now, am I saying that you should just trade once a day or once a thing? No, I'm not saying that. You trade how it works for you, and your strategy is your style and your strategy. But there's a myth, and this is the kind of what I wanted to point out in this video, guys, is that the risking $100 per trade may seem like it's the right thing to do. It might seem like it's the perfect thing to be trading, but ultimately it's actually giving you more risk. So whatever you risk per trade, just think about it. Just think, how many trades am I taking a day? How many trades am I taking a week? What is the ultimate risk there, max? Let me nominalize it percentage wise and say 75% of that, because I'm not going to lose every single trade. I'll be pretty bad. But you should probably go back to that max risk there, because that's the premium that you have to have for going on tilt potentially with the frequency of trades. You can see that it's a bit of a fallacy saying I'm only risking X per trade, because the hidden risk is way, way, way more. And many of you, if I said to you, well, you know, don't risk $100 per trade, risk $2,000 per trade, you go, yeah, I did no. But in actual fact, when you do the numbers, I said, well, risk $2,000 per trade, but find the best possible trade you can this week. You know, you're probably going to get better results, potentially going to get better results, should I say. Let's say that. But so just think about it. I'm going to use extreme examples here, and I've just kind of to prove a point, but just think about how much you're risking per trade, per day, per week, per hour, per month, whatever it is, and then thinking, okay, well, could I scale back the frequency a bit and risk more? And would my results be better? Maybe if I got rid of my very, very worst trades and my very, very worst days, I'd be better off. But if I was trading more size as well, because the ultimate risk per trade could be increased because the frequency was decreased, you know what, I might be onto something. So in the day, it doesn't matter how you get to the number you want to get to and your profit and your goal, whether you do it over 10 trades or 1,000 trades, it doesn't really matter. But sometimes thinking of the hidden risk, and the myth there is that, hey, if I'm risking less per trade, I'm generally risking less, but it's not always the case. All right, guys, take care. See you next one. Bye-bye.